Hello, welcome to Chapter 18 for Business Math called Accounting. This is Lesson 18.9 called Balance Sheet. So as I always say when I start out these videos, make sure you're reading through the chapters, paying attention to the examples that the chapter gives you, the terminology, look at why you're doing something, not just, what do I need to do to get through it, but what is actually happening. That's going to help you understand the basics here as we build through the chapter and then be able to use it kind of at the end, because usually the last couple of sections we kind of bring it all together and have to use it, all the skills together. So again, just make sure, don't just jump straight over the worksheets here. Definitely read through the chapter and look at that first. All right, so a balance sheet shows the financial position of your company on a certain date. It shows your total assets, total liabilities, and owner's equity. Assets equals liabilities plus your owner's equity. It's a pretty straightforward formula there. Vertical analysis is used to find what percentage any item in a financial statement is of the total in the statement. The current ratio is the ratio of the total assets to the total liabilities. So again, here they're just giving to you in formula. So you have current ratio equals your total assets over your total liabilities. And this tells us about the health of the company. Because depending on that ratio, if you have more assets than liabilities, that's a good thing. If you have a whole lot more liabilities than assets, then that's a bad thing, right? We don't want a whole lot of liabilities over what we have for assets to cover them. So it just tells us about the health of the company. Horizontal analysis is the calculation of the dollar amount and the percentage change from one time period to another. So we have percentage change equals the amount of change divided by the original base amount. So again, just kind of a straightforward, we're going to have these pieces in our calculations here. So if we look at this table below, and I'm not going to necessarily fill out the whole table here, we'll go through kind of the number one going across here on the table, just so that you can see how it's done. So we have cash, inventory, supplies, total assets, bank loan, taxes owed, total liabilities, owner's equity. So assets are things that we own that give us value, basically, in a business. So cash, that's definitely value toward the business. Inventory, it's not necessarily cash, but it's value. That's things that we have that we can sell. And then supplies, same thing. That's value that's owned by the company. You're not going to necessarily sell them, but you need them to continue the business. So these are all considered assets. So we simply just need to add them together to get our total assets here. So if I add 24,000, 13,600, and 3,500 here, I will have 41,400. So those are my total assets. Bank loan and taxes owed. So a bank loan, that's something I owe. That's called a liability. That's what we mean by assets and liabilities. So assets are value toward the business. Liability is owed against the business. So taxes owed, it's using the word owed. So we know that these two are liabilities. So we add them together to get our total liabilities. And when I add those two guys together, I get 13,800. And then owner's equity. So what we want to do is subtract these two. And this isn't necessarily one that's shown up here. So this, I believe, is coming from one of the other sections. They definitely explain it in the chapter here. So we're going to subtract assets from liabilities. So we know what our owner's equity is. Because your equity is what you have, the value you have in your business above your liabilities, above what you owe to other outside sources. So we want to simply subtract 13,800 from the 41,100. So if we subtract, and I'm going to write subtract up here, subtract, that's supposed to be a C. I don't know why that looked like an E. All right, so we have 27,300. So it's pretty straightforward on this graph. That's the same method you're going to use for each and every one of these. You're going to add all of your assets. That'll give you your total assets. Add your two liabilities. That'll give you your total liabilities. And then just subtract the two to get your owner's equity. On the second sheet here, let me make sure I'm clicking on it right. Whoop, that one. Okay. So on this sheet, we want to look a little bit more at what a balance sheet actually looks like. So this is what it would look like in more of an accounting situation. You definitely have, your two columns. So we have our assets side here and we have our liability side here. And then owner's equity is just down here in the bottom. Okay, so that this looks very much so like what a balance sheet should look like in an accounting position. So the first thing they want us to do is go through and total our assets. And sometimes students get confused, when there's open spots here that they think this needs to be filled in. It doesn't need to be filled in for each and every piece. So the only reason these are empty is to give room for, all of this over here. But it doesn't necessarily mean that all of this needs to be filled in. The only bit that needs to be filled in is this. So admittedly, that probably should have been a little bit more bolded or indicated as far as, what to fill out. But again, the examples in the book do show you this same type of sheet and how to fill it out. So to get your total assets, you literally just add straight down, add them all up. So if I add up all my assets here, I will have 210,864.30. So I kind of gave you that answer there. We're just adding straight down. So if you add all of these together, this is what you should get. And you're going to do the exact same thing for total liabilities here. You're just going to add straight down, and that will give you your total liability. So I'll let you do that piece just to get the idea there. So I gave you the assets, total assets, but you need to do the total liabilities. Owner's equity, same thing we did on the other sheet. Remember, owner's equity is your value in the business above your liabilities. So what that means is you need to subtract. Once you know your liabilities, subtract that from your total assets, and it'll tell you what your owner's equity actually is. Sorry, wrote a little crooked there. Capital, so this is telling you you have capital of $107,000 and $107,050.61. So this is just your capital, basically money invested in the business here. So we want to add this to our owner's equity because this is more value that we have for our business, because that's literally the money that we have to invest in the business. And that'll tell us our total liabilities and owner's equity. Let's see. It's kind of funny the way they space this one down. This is and, so this is kind of one answer here. There aren't two answers there. It's one answer for that one. And then down below, they have two pieces that you need to calculate off of these numbers. So calculate the current ratio. So if you remember on the first sheet here, current ratio was total assets divided by total liabilities. So again, it just gives us an idea of the health of the company. So that one's pretty straightforward. Once you know your total assets and your total liabilities, you're just dividing the two. And you should end up with, a number that's pretty small. It's going to be either a decimal, 0 point something, or it's going to be 1 point something, if your liabilities are pretty low there, then it would be 1 point something, possibly 2, 3. This one does get a little bit higher than 1, but so just keep that in mind. We want to see where we are. And for this one, we can kind of estimate this isn't going to be much more than about 100,000. It's going to be a little bit over that. Well, our assets were 210,000. So we have a lot of assets and not a whole lot of liabilities compared to the assets. So that hopefully we can kind of compare that in our heads and understand if we're dividing a larger number by a smaller number, we should get a whole number from it, meaning, 1, 2, 3, something along those lines. If last month the total liabilities were 98,000, what is the percent change, nearest tenth of a percent in total liabilities? Again, this was a formula they gave us on that front page there. Percent change equals the amount of the change divided by the original base amount. So if we understand that calculation there, the the amount of change would be the total here. So I'm just going to write liabilities because I didn't do that total for you. Liabilities minus, so I'm talking about this liabilities here, that one right there that you need to calculate, minus the 98,000 that it was last month. That'll tell us what the change was. And then we're going to divide that by the original amount, which is the same one, this liabilities that I'm not just giving to you here. I'm going to make you calculate it. Okay. So again, by liabilities, I just mean this total box here that you need to go back and calculate on your own. So you're going to do this calculation, and that'll give you your percent of change. So, and just a note, if you're doing this with a tutor or a teacher, there is a slight difference in the amount that I calculate here and the amount that the answer key actually gives you. So sometimes that happens. As long as you're using this formula and you're using this way, it should be perfectly fine. You did it correctly. It's okay if it's slightly different than that answer key. I noticed that when I worked it out. All right, well, that is section 9. I will see you in section 10. I hope that helped.